My name is Ela Hrycyk, and I've been with Hub International for about 11 years. And I've been in the insurance industry for 17 years, but doing commercial insurance over the last 8 years. Commercial insurance also, looking at residential investment properties. And I'd like to talk to you guys today about what to look for when protecting this important asset, your investment property. And just like the real estate market for purchasing properties being in a difficult or hot place right now, the insurance industry is in a hard market, which we've been hearing a lot over the last 18 months, but not really understanding what it is. So I'd like to discuss both of those topics today. So we'll just move on here to the slides. I'm just getting comfortable here, just changing the transitions. So bear with me for a moment. So there we go. Just talking about those different packages, how to review them and, know what you're buying and the current hard market. So we'll start with just an overview of the insurance packages, the points that I want to discuss individually with everyone today. This is a big one, the named perils versus a broad form package. When you receive a quote from a broker or an agent, often that declaration page of the quote appears very similar. You're seeing a limit, you're seeing a deductible, but somewhere in there it'll say named perils or broad form, and that drastically changes the type of coverage that you're getting. So it's important to pay attention to that. And we'll discuss each and every single one of these individually. Actual cash value versus replacement cost. So in the event of a loss, how is the insurance company going to calculate what you're going to get? Again, on that quote, you may see $500,000 limit. That doesn't necessarily mean that that's what you're getting in the event of a loss. Permission for vacancy. This is one that people don't often realize, but in their policy wordings, there typically is only an allowance for 30 days. Anything above that for vacancy, you have to actually report to the insurer and possibly actually change your policy or have coverages stripped away. So for investment properties specifically, when you're buying a new property, looking for tenants or in between tenants, you can very quickly go over that 30-day period. Next one will be, limited coverage during vacancy that can occur. Vandalism caused by tenants. This is often a coverage that is either limited or excluded on a policy. So important to, ask the question if that's there, if it's excluded, what the limit is. Rental income. Your rental income often is very important to carry that property and to have have it cash flow in the event that there is a loss where the tenant has to move out for 6 months during the renovations or repairs from that claim. You want to be compensated for that so that you can keep paying your mortgage or keep that property. There's different forms that can be on. And then, your extensions of coverage for sewer backup, flood, and earthquake, you want to make sure those are always included. There's also higher deductibles on those that you want to review when comparing quotes. So we'll move on to discussing these one by one. So the first one was the named perils versus the broad form coverage. The named perils form is limited because it's a lot more restrictive, and the form tells you what you're covered for. So it'll state you're insured if there's a fire, if there's lightning, if there's windstorm. The ones you're seeing on the screen are the most common ones. And the big thing that's not on there is water, pretty much any water, whether it's sewer backup or a burst pipe, that is not included. So a named perils form is not something that you usually want to have your coverage on. You want to have a broad form coverage where that form, you look at the exclusions to know what's covered rather than looking at the coverages. Broad form is an all risk coverage. It means everything is covered unless it's excluded. And your exclusions would be, typical things like terrorism or, nuclear war, Leakage and seepage is one that's usually excluded because an insurance policy is not meant to be for the maintenance of a property. It's meant for the sudden and accidental, unexpected events. So the broad form will typically cover anything as long as you're maintaining the property, it will pretty much cover anything. So again, like I said, I often encounter this where I provide a quote to a client and they'll say, well, I got something better. And then when they actually share the quote with me, I see, well, you're getting named perils coverage. Did you know the difference? So it's good to, especially when comparing two quotes, that you're looking at apples to apples. And along with that form sorry, I am having a little trouble here. I am going back to that slide now. Along with that form, you will see the valuation of how a claim will be settled for your building. So actual cash value versus replacement cost. Replacement cost means that the company is going to rebuild your building based on the specifications that you've provided. So square footage, construction materials of like kind and quality, and up to the limit insured. So, I mean, if the building has been uninsured severely, then, you may be at a loss there, but otherwise you're getting the building rebuilt. Where actual cash value actually takes depreciation into account. So often we see, clients buying buildings that are over 100 years old. If you're getting coverage on actual cash value, well, think about the brick and the lumber, how that's going to be depreciated by an insurance company in the event of a loss. If it's on an actual cash value form, you are unlikely going to be getting that building rebuilt. You're going to be taking a cash settlement that's going to be very short of what you need to actually rebuild that building. So actual cash value policies I will usually set up for clients that are buying a property that's going to be demolished and they just need coverage to satisfy a lender, something that we can't get replacement cost for. Otherwise, it is never a go-to because in the event of a loss, it's just a nightmare to try to settle and figure out the numbers, and it's never enough. Okay, the next slide we'll talk about. These transitions are very slow. The vacancy allowance period. So as mentioned before, most policies will have this 30-day vacancy allowance. Anything above that, you actually have to advise your insurance company about it. They will either put a vacancy permit on it and surcharge you for it. They will often strip away water coverages or put other conditions on the policy saying that you have to have someone check on the property on a regular basis. Specifically when it comes to the heating season, you need to make sure that either somebody is checking on the property daily to make sure that the heating is working, or draining the pipes and turning off the water. And that's to prevent, obviously, a burst pipe, freezing burst pipe happening in the event that the heating fails. And if somebody's not there to discover it for 2 weeks at a time, the damage can be significant. So a lot of
yeah, sorry, if the water is shut off and you do that that drain that you talked about, is it do you still need somebody to check the property every single day, or is it different then?
So it's different then, exactly. So if it's if you're going to shut the water off and drain the pipes, then you don't need anybody checking on the property. Okay, but you still have to inform your insurer.
Right.
Okay. So a lot of insurance policies, if you shop around and look for the right product, will give extended periods, up to 120 days, where you don't actually have to worry about it. So when you're in between tenants or doing some, light cosmetic renos, when you purchase a location, you don't have to worry about letting your insurance company know about any of that.
Ella, have you had experience with really bad tenant damage? Have you seen?
Yes. And the actually my second point there, the most often is when a tenant has to be evicted. They like to leave their mark on their way out. So really important doing good, tenant screening helps, but that's every time I've had this claim, it has come from a tenant being evicted.
Yeah, not soon
Yeah.
enough, probably.
Right.
And
Yes.
Ella, from what I understand, a lot of policies don't include tenant damages anymore, tenant vandalism. Is that right? Because
Yes, it is. It's becoming a very common exclusion now, and when it is included, it's included with a limit.
okay.
Okay. Okay, we'll move on to the next slide. And that is so rental income insurance. That also comes on different kind of forms and limits, and you know, obviously that pays for your rental income in the event that there's a covered loss and your tenant has to live at a temporary location, be it a hotel or whatever it may be, while your property is being rebuilt. Maybe they'll just walk away from the deal if there was a major loss. And, you know, if the house is being rebuilt for a year, that's a big hit if you're not getting that rental income and you're carrying a mortgage on the property. So this will continue to keep that going in the event of a claim. There are different forms that the rental income coverage can be on. Actual loss sustained is the ideal one. Essentially what it means is that there's no limit. You just have to prove what the actual loss is, and it will be paid for 12 months. On bigger buildings, you would like to look at extending that indemnity period to more 18, 24 months. Like an apartment building, 12 months is usually not enough to rebuild in the event of a total loss. But on you know, up to 6 units dwellings, 12 months is usually enough. So that's another point to review on your policy.
So Ella, if you had a claim where you needed to cover 12 months worth of rental income, what's that going to do to your premium in the future or after that? You know, if you're continuing to build your portfolio and add properties and you've had a claim whereby, you know, maybe you had to claim $30,000 for that year of income, for that rental income, how's that going to affect your premium moving forward?
So that's a great question. It all depends on how your policy is set up. If it's in a pool, like a program pool, our rates would be determined based on the performance of the program. So even though you are the one who suffered the loss, depending what the loss is, and that's the beauty about commercial insurance, is that it's not regulated. Like a lot of provinces in Canada, auto insurance is regulated by the government, where property insurance is not. So the insurance companies really can look at everything and decide how they want to handle it. We will get them to agree to certain parameters on how we're going to manage a program. So on a program, you know, if it's a loss that really you couldn't have prevented, you know, you'll definitely get an increase, but it may not be very substantial. It also depends on how long you've been with that insurance company. So, and that's another thing I talk about is your relationship with your broker and with your insurer. If you've been with them for 10 years, claims free, and now you've had this one loss, they take that into consideration as well, as opposed to you're a new client to them and now you've suffered this loss. So all that is considered when they are coming up with your renewal rate. If it was something that, you know, maybe you could have prevented, they might put more conditions on the policy to ensure that you're not going to you're going to make sure that doesn't happen again. But, you know, you're not necessarily going to get non-renewed. 2 claims in 5 years, you may have to go to a specialty market. 1 claim is still, you know, you'd be looking at maybe a surcharge of between 25 and 40%, which I'm talking right now in the hard market, where our normal increases are like 8 to 40%.
Yeah, wow.
Yeah. Okay. So, you know, it really depends. It's a hard question to answer because it depends on every situation.
Ella, just a quick question from Mel here. If the basement has a high-low sensor for water, does the building still need to be checked every day? If there's a sensor alarm that kind of lets you know whether or not there's flooding or water.
So that'll depend on the insurer. You still have to let them know. And if they agree to this, then you're okay. But often they'll say, well, what if that fails, right? Then we're still on the hook. And they might say you still need it to be checked every day.
Okay, thank you.
Okay, because there could be other things that could happen when a property is vacant. Somebody could break in and just hang out and live there and start a bonfire, and a lot of things can happen when it's just not being checked on.
Okay. And for tenant damages, another question from Yuki here. What are the most typical damages that you see?
Oh boy. Do we really want to get into this? So the nastiest one that I've seen was actually the kitty litter put into the drains.
Ooh.
Yeah, so that was that was just among many things that had been done, but that one was kind of, I never seen that before. How did they get that creative? Holes in walls, punching holes in walls, breaking windows, scratching the flooring, ripping the carpets. That's that's the most common.
Pretty well anything you can do to a dwelling.
Yeah.
Absolutely.
Sorry, I kind of jumped around on the slides here. Let me just see where we've left off. Okay, here we go. So the next one will be the sewer backup, flood, and earthquake. So these are typically additional coverages that you will see on your quote or declaration page, specifically stated that the coverage is there. If it's not stated, then it likely is not there. So it's good to inquire. A sewer backup doesn't necessarily mean that it's coming from your basement drain. It could come from a toilet or a sink, and it is also a most common claim. So that's usually comes with a limit or a higher deductible. So it's good to review what that is. Flood could be any kind of, tidal wave or overflow of body of water. Those will usually come with higher deductibles, but it's, when that comes, the damage is significant, as well as earthquake. Any kind of landslide, earth movement, and those deductibles are also higher. And the premium for that coverage is super low because it's, not as common in Canada. So it's good to make sure those coverages are there. This is an important one is, it's not mandatory, but all insurance companies say that they would like you to recommend this coverage for your tenants. And it really is a good protection for your claims history. You may have a claim that was caused by your tenant that your insurer will be able to subrogate from them if they have insurance, and you can continue to have a claims-free record. So a lot of people don't realize that it's not just for your tenant to have their contents coverage or their own liability, but for any kind of loss that can happen. The tenant is responsible for shoveling the snow while they're occupying the premises. So when there's a slip and fall and the landlord is getting sued, you can actually have your insurer subrogate that claim against the tenant's policy. So, that's huge because you can, especially when you have a portfolio of locations and you want to have a clean claims history, even though your policy is responding to it, if they're able to recover all the funds from the tenant's policy, it's as if that claim never happened.
There's two key points in there, Ella, and the first one is within your residential leases that you have with your tenants, you should have clauses in there that state that first of all, they are responsible for things like clearing the pathways in winter. So if there is an incident, it is their responsibility from a legal perspective. Even though you are the property owner, you're passing on that responsibility. The second is that you have in your lease that it is recommended that they do get tenant insurance. And something that we actually do is we actually request it within 30 days of move-in, that they actually provide us with a copy of their proof of their insurance. So we have that on file as well. But especially for them to pass on that component in relationship to the yard and the pathway to keep the property maintained, That way, in the event that something does happen, you can actually provide that documentation to say, look, they signed this lease, there's a copy of it here, it states it's their responsibility, and also here is their tenant insurance as well. So to your point, Ella, to proceed with building a portfolio and keeping that history, your claims history, as clean as possible, those are just a couple of key points that investors should take note of.
Exactly. And the other point to add to that is when there is a claim and your tenants, the contents are damaged and they are not insured, I've seen them trying to sue the landlord for those contents because they didn't have coverage. So that's another good point to, you can go back and say, well, I told you that you're responsible for that, and kind of referring to that lease. And it just solves so many problems when they do actually obtain. It's just, even though you obtain the certificate of insurance, they may go and cancel it next month, right? So it's hard to monitor that they're actually keeping that coverage in place. So definitely having it in your lease that they are responsible to have that, helps in the event that there is something that you have to defend in the court of law. How much should you insure your building for? So a lot of times, depending on the area where the house is being purchased or building, the real estate market value may be very, very different from the actual rebuilding value. So knowing that, the land, we're only insuring liability on the land. We're not insuring, the value of the land. It's just for the cost to rebuild, the labor and materials to rebuild that house. So it's important to, provide proper construction information, whether it's brick, whether it's siding, what the square footage is, and not to forget detached structures. Often properties will have multiple detached structures, large heated garages and things like that. So if those things are not disclosed, there may not be coverage for them. Just because on a normal homeowner's policy, there are automatic extensions for these things, where on a commercial or rental property policy, everything is modular and pieced together. So nothing is automatic. So it's important to review all of these additional structures that you may have. Contents insurance for the landlord. So most often long-term lease rentals do not provide, furniture or anything like that, but you will still have appliances that will belong to the landlord that you may want to have replaced in the event of a loss. So per unit, $5,000 to $10,000 is typical, but there are policies where clients are renting a furnished unit. So you got to make sure that you're also disclosing that to have that covered on your rental property insurance. So that's it for the different packages. We're going to move on to talk about the hard market, why it's happening and what it means. Unless there's any more questions about the insurance packages, I'll jump into this one. Yeah,
feel free to pop any questions that come to mind in the chat, guys, and we'll try and address them as we go.
Yeah, Paul has a question here, Ella. Just did you have any clients in Calgary that you had to deal with during that flood of 2013, and how did the insurance company handle that had their property damaged during the flood?
Yes, so we did have a lot of claims with that. Not that many. A lot of those clients, there was a lot of programs back then that existed for rental properties. As a result of that, a lot of those programs have disappeared, and a lot of that also has to do with why we moved into a hard market. It's just because there was large payouts and a lot of pricing that didn't anticipate these losses.
But the claim itself was pretty straightforward, though. Yeah, the assessor would come out, take a look at the property, give an estimate, and it was kind of just go through as normal. Or was there anything special that happened because it was an exceptional circumstance?
From my experience, no. I mean, there's the higher deductibles that needed to be paid, but other than that, it was pretty straightforward. Other than we were overwhelmed, and insurance companies had to sub out adjusters from contract them out because they didn't have enough on hand, and that's a common practice that insurance companies do. They're never prepared with enough adjusters. When we get hit with a natural disaster, we have to sub out. but I didn't see any, declines, if that's what you're asking
Okay,
for.
yeah, okay.
Yeah.
It's good to know. Thank you.
Okay, so we'll go into the hard market. So the hard market is cyclical, and it happens every decade or so. Usually lasts about 18 months. We're currently in it for about 2 years, especially in the realty sector, which is unfortunate. It started before the pandemic, and going into the pandemic, I think it just bought us more time with being in it. What happens with the hard market is insurance companies have a certain amount of capacity of what they can promise to sell insurance for. And not necessarily that they're not making money, but insurance companies are typically for-profit companies, and they look at sectors that are making better margins than others. And because realty was hit really hard with a lot of water claims, also with like high-rise buildings, apartment buildings got hit with also a lot of hefty water claims because it all trickles down. And they were just not pricing them appropriately to make underwriting profit from it. What happened was a lot of the main players either completely withdrew from the market to create capacity in other sectors, or focused on best in class, started asking additional underwriting information, deciding that they're only going to keep buildings that are built from a certain age and up, not considering anything older unless we had proof of full updates. And by full updates, I mean everything. And it's really unrealistic that plumbing in a building was 100% updated. So it was really hard to provide a lot of this proof, and left the brokers and agents approaching a lot of our specialty markets for quotes, flooding them for these requests. And then they smartened up and started picking best in class, which created a lot of chaos because we left buildings ended up being uninsured. So it was very hard. We're slowly coming out of it, and we're seeing things loosen. They've gone back to their actuaries to work through the numbers, and unfortunately getting hit with a lot of increases as a result. But at this point, and I'm talking more about buildings, not so much your residential 1 to 6 family homes, although those were impacted, but it was more the like high-rise and taller buildings that were really hit very hard with trying to find coverage at all. I'm just going to move on to the next slide.
I think there was some changes too with the way that insurance worked with condo boards and owners of which I'm sure had an adverse effect on the cost for consumers.
Yes, exactly. So that actually also came into play around the time the hard market started. And the reason that was triggered is because of the difficulty of the condo boards trying to get coverage for the building and the increased cost. So they had changed the bylaws to try to put more onus on the unit owners to share in the losses for the common elements and the deductible. Which also had to, it was a trickled effect to insurance policies for those condo units as well. Seeing those premiums go up from where, like condo units used to be sold, rental condo units used to go for $200 a pop, where now you're seeing them go up to as high as, $700 to $700 to $1,000. So it was times 5 for your condo rental unit. Yes, so that exactly. I'm glad you reminded me of that point, but that was a big discussion, mainly in Alberta and BC. So again, what we talked about with seeing a lot of non-renewals and other markets being overwhelmed by submissions, causing them to screen for best in class. The remaining insurers that are still looking to write this business are asking more questions and being more restrictive, increasing deductibles and premiums, more inspections being ordered, more recommendations and requesting them to be done urgently, and those updates, wanting those updates within the last 15 to 20 years.
Ella, what updates would you include in that list? What does that mean?
So it would be your electrical, your plumbing, the roof, and the heating. Those are the
Okay.
4 things that we ask for right up front.
Okay, good to know.
Okay, so what to look for, the takeaways. If you have insurance currently on rental properties, especially bigger ones, be prepared. Where I've seen a lot of clients will say, well, I've never been asked this before. Why do I have to provide this now? This is happening everywhere. So be prepared for additional questions, providing photos, and cooperating with your broker, because we're all in the same boat. And to get out there ahead of time. Get out there ahead of time, find out what the anticipated increase is going to be, what markets are still interested in this business, and what they would want to make your building attractive to them. And if you can get it done, get it done. Because like I said, like we're seeing buildings left uninsured. So it is important to just cooperate and get those things done, and work with your broker to see who's still in the game for this type of business, because the increases are as high as 40% on buildings. We're seeing that regularly now as a norm. Not so much on the single to 4 or 5 plexes, but on the buildings. And then for new purchases, it's important to anything that's built before 1975. I've seen a lot of times people want to jump into the real estate market when they see a good deal and they can scoop something up and not pay attention to or do an inspection on the building. And then they're buying something that has knob and tube wiring, and now they find out they can't close on the deal because they can't get insurance. So now more than ever, it is important to know what the electrical, plumbing, heating is. When was it last updated? You don't want to get locked into something that you're not going to be able to close on because of the insurance.
Is there a case, Ella, whereby you can, as a purchaser, work with your broker to maybe get a 30-day period in time where you'll agree to update some of those things that might need updating to get the deal done?
So you used to be that we always were able to do that, where that was becoming harder. With the single unit, 4-plex, you can still find that, not always, but you can. Where with the buildings and high rises, it's really on a one-off exception basis. I've had a few where we've had them referred up as high as possible to management and still get declined. And what we have to do then is we have to go to the open market in London, England, and get coverage there. That's costing the client like $1 per $100 of coverage, which is compared to a 10-cent rate, right? Yeah. So it's 10 times more expensive, and it's stripped away coverage. It's not broad form. It's actual cash value, and they have to set that up until those things are done, and then they can come back to a regular market to get proper coverage. Okay, so there is a way to do it, is the key takeaway, but it's very, very expensive and somewhat difficult. Well, yeah, there's always a way to do it, but the problem is that when there's a lender involved, the lender might say, I don't like this coverage, right? We're only going to accept broad form, and if we can't get them broad form until that's done, then we hit a wall with nowhere to go. So good to reach out to your broker when buying a new property to confirm, hey, do you foresee there's going to be a problem here before putting in that deposit, especially on something bigger.
So Ella, I just purchased property last month, and I just had my 30 days time frame to remedy my deficits. But is that an exception rather than a rule, or at this point?
With what, sorry?
With like the 30 days. I mean, like, because I was given the 30 days, so I appreciate that. Thank you. To fix a furnace and get a couple inspections. Do you find that is an exception rather than a rule now, when there's a time when there's an allowance to be given to a client to remedy deficits?
Yes. So the investment program that we have at Hub that you're referring to, we do offer that for almost all of our clients. There is eligibility rules that you have to qualify to be part of that program, but we do offer that as standard.
Oh, okay.
Yes. So as long as you qualify under that investment program, now that investment program is not for buildings. It really only goes up to a rebuilding limit of no higher than $1 million. Okay, so anything that has a rebuilding limit higher than $1 million, you wouldn't qualify anymore for the program, and that would be unlikely that you'd be given those 30 days. But in our program, we do still allow that, which is great, which is fantastic, especially in this hard market.
Totally. Okay, that's good to know. Thank you.
Yes, great.
Yeah, I think I need to take some photos actually. Now that I think of it, I think I'm getting to the end of one of my subjectives. So sorry.
Well, it depends what it is, right? If it's something that's the electrical is the one that they're usually very picky on. On the other ones, if you need more time, and especially with the pandemic, it's harder to get contractors to come out. They're pretty understanding with getting that arranged and extended. But as long as you're communicating, and that's the last point that I wanted to talk about, the broker relationship and the insurer relationship is more important than ever. Again, the industry is not that regulated. So an underwriter, if they trust the broker and they know that they're really screening their clients and they work with clients who belong to associations, they know what they're doing. They're screening for their tenants. They're not just getting whatever and saying, who cares, it's insured, right? So if they trust that the broker is bringing quality clients, when they ask for exceptions, they're more lenient with providing them. Where if you're just a shopper that's always bouncing around from one end to another, there may not be as much accommodations available.
Ella, in regards to the regulation side of things, do you foresee that changing in the future?
I really would hope to say yes, but I don't think so.
What would be the benefit? So. Why yes? What's your thoughts there?
Well, from what I see in the auto industry in the provinces that it is regulated, there is a lot of pressure put on the insurers, to keep premiums low, to offer certain coverages. If they are, like in Ontario, there was just way too many payouts on the accident benefits, which was causing the premiums to go extremely high, making it unaffordable. So what the government did was they reviewed, what those limits were and discovered that actually in Ontario, we had the highest accident benefits limits in all of North America. So they decided to kind of cut back on those to make it more uniform to the rest of the country, which allowed the insurance companies to have smaller payouts, and as a result, were forced to bring some of those premiums down. So, and just like I talked about capacity, because they're for-profit companies, they will kind of shift things around, shift their capacity to where they're making more money. So it may not be that sector is unprofitable, but another sector is more profitable. So they'll just put all their capacity there. Where if the government has more regulation over it, saying, hey, if you want to sell insurance in this province, you have to be able to do a certain amount of capacity in each sector. It would open up more options for the consumer.
Mm-hmm.
Yeah, but I don't think that will be coming. I don't think the government wants to get involved in that.
Okay. Quick question, Ella. So say if you were a homeowner and you purchased a homeowner's insurance policy and you wanted to buy, but then you decided to buy another property and move out of that single property during that time of that is still insured under homeowner's insurance, but you turn it into a rental and something were to happen to that property, would that be an issue? How would the insurance company handle that?
So if you lived in your home and had it insured as your primary residence,
Yep.
yes,
Yeah.
and decided to move out and rent it out,
Yep. But
and
you didn't
you're
change
not-
it. You
you're
didn't
not
change your
informing
policy.
your insurer,
Yeah.
yeah, you're potentially risking having no coverage. So that is a material change in risk. And the insurance company could say your coverage is void if something happens because you didn't inform them of the change in occupancy. It is one of the conditions in your policy that you do have to inform them when there's a change in occupancy.
Okay. That's good to know.
I'm sure that happens all the time.
Yeah.
I could just imagine that happens all the time. So very important, guys. Make sure you update your insurance company on a property when it changes status. Similar to how you would report it to CRA when you do your taxes. Change of status. Yeah.
So yeah, my wrap up here is, working with your broker, having them review everything, looking at what is the best fit, having, take that additional task off your shoulders as having that power team. As an investor, you have to know a little bit about the realty sector in terms of, buying properties, in terms of mortgages, mortgage rates, to have to know everything there is to know about insurance is just another thing that's that you can take off your plate if you have, the right fit broker that you trust and has access to a lot of markets. It can find you the proper coverage, whether it be a vacant property or a rental or a renovation project. And I hope that wasn't too boring. I know insurance isn't that fun, but thank you for listening to me. And feel free to reach out to me and call me and email me if you have any questions or anything you'd like me to look at. I'd be happy to help.